All right. Okay, perfect. Hello, everybody. Welcome to our real estate mastermind. We are talking about the first time home buyers' keys to confidence today. So, we have a great panel and we are going to go ahead and jump right in. So, I'm going to go ahead and bring everyone in. All right. Okay, where did they go? Okay, perfect. Here comes everybody now.
Hey, how are you, Haley?
Hey,
Hey. I can hear you now.
okay, perfect. Hi. All right, good. Jamie, Jennifer, Fabi, we are recording. We're going ahead and get rocking and rolling. If everyone wants to unmute their self, and then we'll do a quick roundabout introductions, and then we'll go ahead and we'll dive in. All right. Fabi, we'll go ahead. We'll start with you since you and I are going to be co-hosting this thing together.
Sure. I'm Bobby, Senior Vice President of AnnieMac over here and located outside of DC Metro in Northern Virginia.
Awesome. Fabi, tell us a little bit about how long you've been doing mortgages and how excited you are to be here today.
Yeah. So I've been in the mortgage business since 1994, so about 31 years now.
My
And
whole life.
yeah, that's what I get told a lot now. You know what I mean? And it's not funny anymore, by the way.
Noted.
First two times it was funny, you know what I mean? But and the nice thing about this webinar is that in 31 years, you get to see a lot of first-time home buyers. And no matter what the seasons are, no matter what the rates are, the feelings are pretty much the same across the board. So the more we deal with them, the better we can understand them and help them through their journey of first-time home buyership. Because look, it is an important part of people's American dream of being a homeowner. So to being able to facilitate that and be part of that, it is an honor. And I think it shouldn't be lost on us in our industry.
Yeah. Yeah, definitely 100%. And it's a big milestone. And because we're so used to doing it and being a part of it so often, sometimes we forget how exciting it is and how important it
Yeah.
is.
Yeah, and a lot of questions. I mean, and there's going to be tons of questions.
Yeah. Yeah,
You know, you're
definitely.
dealing with first-time home buyers, you just got to be ready for that.
Right. Right. Jamie, tell us a little bit about yourself and how long you've been doing mortgages and what you love about it.
Hi, everyone. My name is Jamie Mason. I am in Connecticut. I am a loan originator in Connecticut. I have been in the mortgage business 23 years. And so really it's all I know. I've seen all the ups and downs of the markets, and I really enjoy working with first-time home buyers because they're so appreciative. It's a feel good to help people obtain their dreams of homeownership.
Yeah, definitely. Definitely. Jennifer, how about you?
My name is Jennifer DeLuca. I live in Delaware, but I work Pennsylvania, Maryland, Jersey, Delaware, that whole area. I've been in mortgages only about 4 years, a little over 4 years. It feels like a really long time, but I absolutely love it. I love working with AnnieMac. It's like a family here. There's always somebody to help us and answer our questions. Absolutely love working with first-time home buyers because of like just the education part. We're not taught these things in school. So everyone wants to own a home, right? But they just don't know what they're doing. So I just really like the education part of it, making them feel confident in the very beginning before they even start looking and shopping so that they feel knowledgeable and educated when they're going out and putting in offers.
Yeah, definitely. So being kind of in the Northeast a little bit, what are you guys seeing in the market up there?
It's tough. It's very competitive. So the education part is really important for first-time home buyers because entering the market, they really have to be prepared. So especially now.
Hey, Jennifer, when you say the word prepared, I mean, can you dive into that a little bit? Because that's such a kind of a general statement. Be great for the audience to understand what you mean by that.
Yeah, I think, well, the market changes, right? Year over year over year. So a lot of first-time home buyers, they get a lot of their information from family members or their parents. You know, it was 20 years ago when they bought a house. So they're getting that um, advice from their parents or family members. But if that was more than 5 years ago, this is a totally different market that we're in. So you really have to be prepared for the intensity of it. You can't just, if you see a house you like, you don't have a week to think about it and then maybe put an offer in next week. You know, you have, so the preparedness has to be making sure they know they're ready, they know their numbers, they know their monthly payment, they know how much money they're going to need so that when they do go to look for the house, if they like it, they need to be ready to put an offer in right away.
Okay.
Definitely.
Yeah.
Definitely. Jamie, what are you seeing? Some similar stuff, multiple offers and cutthroat almost?
Very cutthroat, a lot of multiple offers, still 40, $50,000 over asking price. And so in this market, it's relationship too. So I think it's important for the real estate agents as well as the customers to know that you're working with somebody who, has a presence in the local area versus, some of the online companies or, thinking that you're just gonna go online and, press a couple buttons and get your mortgage. A lot of it has to do with who's sending that offer. And so when we're putting in the offers, being able to pick up the phone, call the agents, call the listing agents, they know us. I feel like it's turning a little bit to where it's going back to, oh, I know that agent. There was a time during COVID that it was like, oh my God, I've never even heard of any of these people that I'm putting in offers with. I think it's shifted a lot to where you have the relationships again with a lot of the agents, especially the listing agents, and they know you. So they know that, you're going to do a good job and get it done.
Haley, Jamie brought up a really good topic there. I mean, I don't know if we have I always love these little rabbit holes we
Yeah.
create, right? But I mean, relationships versus online lenders, right? I mean, because we are seeing a lot of movement in the online universe, right? Especially the last few weeks. There's been a huge play by major lenders. Jamie, I mean, are you seeing that relationships are like the turning point between a listing agent saying, "Oh, I know Jamie, I know Annie Mac, I can trust them," versus not having that kind of reputation, that relationship in your community?
Absolutely. The agents, they don't want to see certain names on that letter. I don't want to, name any names, but they'll see some of those names and say, no, I think you should get a second opinion, because they want to know that the deal is going to close. So I think it's super important, regardless, AI is coming in and, there's a lot of online companies coming in, but I think this business is always going to be in some way, shape, or form relational and having those relationships and being able to talk to the lender instead of having nobody to call.
Exactly. And being able to contact the lender quickly.
Mm.
Sometimes you can connect with people on those online mortgage companies, but it's Monday through Friday, 9 to 5. And who's house hunting from 9 to 5? Everyone's at work.
Exactly.
So being able to contact the local lender all of the time, I feel like that really definitely makes a difference. And do you feel like those offers are more likely to get accepted when they're working with the local lenders, like you just mentioned, rather than those online companies? Do you feel like that presence and the ability really makes a huge difference?
Yeah, absolutely. Absolutely. Especially if they feel comfortable, they could give you a call. I mean, it's the same thing for the banks. Sometimes people are super rate conscious and, they'll look at a local bank or a credit union and on any given day, they might have a better rate, but try calling a bank after 4:30, 5 o'clock during the week when you want to put in your offer or on a weekend and they're not going to be there.
Yeah.
Yeah.
Holiday
So
weekend.
it does make a difference.
It's weird. I was actually refinancing someone else's loan. I can't remember. I don't do a lot of loans anymore. So but that's what I do is like, and they're like, they got a reference number from somebody. And every time they would call the reference number, they couldn't locate the file.
Oh gosh.
And so they're like, hold on, but I got the reference number here. And they finally just got so frustrated. They're like, hey, my cousin told me to call you. Can you help me out?
Wow.
It really is those relationships that Jamie's talking about. You know what I mean?
Mhm.
Where, okay, maybe, I mean, I hate to say this, but sometimes like the rate is advertised, but it's not what you get.
Right.
There's all these changes that are happening. They're not looking at the credit score. They're not looking at the down payment. And they give you this rate just based on if you have all these features, you should be able to get this rate. But, if the rate changes between the time you call, then all of a sudden you get a higher rate and you're kind of stuck with it at that point. So
I
one
don't
question
know.
I do have for you guys, Jennifer, sorry.
Going to
Go ahead.
say something else too about just texting too. I don't know about anybody else, but I'm a texter. So, working with someone like a real person, a live local person, I do a lot of texting with the first time home buyers, with agents, with the listing side, with the buying side. So that also goes a long way as well because everyone's busy and their communication style is different. And especially first time home buyers, that's what we're talking about today. Most of them are in their 30s, so they're texters. So I just wanted to bring that point up.
Yeah, that's
Yeah.
a great thing
True.
to add because
Yeah.
you can't always, even the online chats, you can't always get someone on the online chats. And I don't know about you guys, but I'm answering my phone at 9:30. If I'm just hanging out doing a whole lot of
Yeah.
nothing, I have no problem texting back a client and saying, yeah, you know what, we're going to get that lined up for you and we'll be ready to go. So that definitely makes a difference.
Do you guys ever ask your clients like what kind of communication they prefer?
I
Like,
always do.
do you
Yeah,
prefer
no big
text?
thing.
Do you prefer
Mhm.
phone call? Like, you guys do that, huh?
Yeah.
Yes, our processors do that too. We have some really great processors, and that's the first question they're asking when they're reaching out. Which form of communication do you prefer?
Yeah. I think that's so important because you got to know the preference. Like for me, I'm a phone guy,
Me
right?
too.
I want to pick up the phone and just get it over with. Like I don't want to have 18 different texts with Jennifer. I'm sorry, Jennifer. I don't know you, but
Oh, no.
you know what I mean? Like 18 texts back and forth just to get the answers is so for me it's like if you know that I want to have a phone call, I got this client, he's one of those old-fashioned guys that still has a rotary phone. So go ahead and just pick up the phone and call me.
Yep. Some agents that I work with, they're onto that the voice chat. So I guess it's like a text, but you're leaving. So I started doing that more, which is nice. So
Yeah.
yeah.
A
Yeah.
little voice behind the message.
Yep.
So we mentioned multiple offer situations are still happening. As a first-time home buyer, when I was a first-time home buyer, the thought of putting in an offer and not knowing that it was going to be accepted, and I bought my house in 2020 right before everything got crazy. So it was still finding the right house for you rather than finding the right house for you and then finding it three times after that and then getting your offer accepted finally. What are some tips that you share with first-time home buyers aside from just being prepared, but on how to navigate that consistently changing and never really the same market that we're in right now?
I can answer. I always just make sure that they are putting their best foot forward. There's not really a deal in this market. The deal is you get the house. Like that's the deal, right? So you really can't go in under asking and all those things. But I really like to make sure if they're qualified for some of our amazing programs that will get them in the house. That's what I always look for. So cash offer for first time home buyers, if they're qualified for that program, I absolutely mention that to them and try to get them all set up for that. And that's going to allow them to put in a cash offer on the house with no financing contingencies on the contract. And we're AnnieMax basically backing them up in cash with that offer. They're going to get a mortgage, but if they, for some reason, disqualify themselves before they get to the closing table, we're still going to buy it in cash. So that puts their offer pretty much at the top of the pile or with the other cash offers that are on the table on the popular properties.
Absolutely. Imagine putting in an FHA offer as cash because we're
Yeah.
doing that. They're marking off cash on that contract, even if the borrower is approved with an FHA mortgage. It's kind of crazy, but we are doing it.
Yeah.
And it really helps.
Yeah.
And not everybody's going to fit that program, but I also, besides the cash to keys, which is huge with us here at AnnieMac, just a regular underwriting approval goes a long way. So we try to put as many clients into underwriting ahead of time as possible so that at least they have a fully underwritten approval. And the same thing for bond. So I do a lot of bond. I do in Connecticut, it's CHAFA. In the time to own. And that is a really great program for, first time home buyers that might only have a little bit of money to put down, and we're getting them underwritten up front. So we're halfway done. So if you're an agent on this call, you don't have to be scared to accept the offers on the bond loans, because I think anyway, we do a really good job of making sure that we have the file in really good position even before their offer is accepted. And then once they have that offer accepted, we're just, tidying up that approval, getting the appraisal done, getting the title order done, and then we're ready to send it. I know every state has a different product, but, we're sending it to CHAFA. CHAFA's been really great. They've been like 24, 48 hours this whole time. And if it's especially if it's a conventional CHFA, it's like any other conventional loan. So don't be afraid of accepting those bond offers because they're really great programs for these first-time home buyers. Connecticut gives up to $25,000 with the time to own program. So I don't know what some of the other states, Jennifer, you could touch on
Yeah,
yours.
Delaware's program is really, really good too. We have had no problems. I've been doing 30-day closes with the down payment assistant loans. I think, I can't speak for every mortgage company and every loan officer, but I know that Jamie and I myself, we do a lot of things beforehand. Every document that you can possibly think that you're going to need is already in the folder and already there when we're putting in an offer. So the timeline to get these loans closed for the down payment assistance loans, they're fast because we've already done most of the work up front. Um, so
Okay, so there's some questions coming in. Let's dive
okay,
into the questions here on this. So the process for approving these loans, I guess the cash to keys is what we're talking about, right?
okay,
The same process as
yep,
I guess other TBD loans because I know we have platinum pre-approvals, right?
Right.
yeah.
Is what the cash to keys program uses. So I think there's a question out here is that the same process?
Yes, it is the same process. You're still sending it into underwriting for the underwrite in the beginning. The cash offer program, the requirements are pretty much the same as any conventional FHA. Any of the guidelines that come along with those loan programs are the same. The one and only thing that's different is that in addition to the earnest money deposit that the buyer is going to give with their contract, they're also going to leave a deposit with us for cash to keys. It just gets held in escrow, just like the EMD, and then it just gets all returned to them at the end when they close with the mortgage.
Yeah, yeah. So
Yeah.
That's the only difference.
and and,
And
that's- and you're talking about the cash offer part, right? Because obviously first time home buyers, we're not going to be worrying about the buy now sell later program.
Right, yeah. Just the
Two
cash
different
offer.
programs, but it's the cash offer that we're talking about.
Right.
And the guarantee part, because I think this is where realtors want to know. Like in the event my borrower like whatever loses his job or their job, right?
Mhm.
What is AnnieMac going to do on that date? How are they going to satisfy the seller on that particular home?
They're going to buy the house in cash.
Yeah. So this makes it even better than a regular cash deal, honestly, because if I go out and I'm a cash buyer and I spend all my money in Vegas and then I can't buy this house, like that's it, you know? But using the cash offer program, like that's now backed. So it's a guarantee. So that's like what we're saying when we say a guarantee. Like
Hmm.
it's
yeah, so basically, not to cut you off, but on the FHA, they're going to look at the property up front because the property has to be an FHA passable in condition to pass FHA. So that the home processing coordinator do look at that property before you're putting the offer in. And then we're getting all of the borrower's documents and we're submitting them into underwriting. Once we have that full underwriting approval, yourself as an agent gets a welcome email with the instructions on how to put in the offer, and the borrower has that welcome call. So they also understand the process. Each state's a little different because somebody's asking about the deposit. So each state is a little different. In Connecticut, it's 2% cash offer fee, 1% earnest money. So our approved attorney is holding that 3% right off the rip. But when you're filling out your contract, even though we have our borrower approved with an FHA mortgage, you are still checking off cash. There is going to be inspection appraisal window. You can use a regular appraisal rider, or you can put a blurb that they'll tell you to put in the contract. Once we are beyond that period of the 14 days, it is a guaranteed close. Whether they buy it or we do, somebody's going to close on that property.
Guys, this is just amazing. I mean, I'm like I remember I'll never forget the first time Joe P talked about this program to me. And I looked at him straight in the eyes like, what do you mean?
make it make
We're like this is not a nonprofit industry.
yeah.
And I didn't understand the concept behind it. It took me at least a year to understand it. I'm a
Yeah.
very slow learner and I'm skeptic.
Yeah, I agree. There's a lot of skeptics, and the first question I always get is, "What's in it for you? How much are you making off of this?" And my answer is always, we get the loan. We get the offer accepted. That is the win because just like you as agents out there, we're all bidding on the same house. There's a lot of people wanting the same house. So when we have a cash offer on the table from Annie Mac, it's usually accepted. So we get the loan, and then we're happy.
Yeah, I
And
think
then
it was the
you're
light
happy.
bulb went
Yeah.
off for me when I realized that this is not a mortgage program. It's a new platform to buy homes with for
Yeah.
realtors. We
Yeah.
just
The loan is the same. Yeah, the loan. Yeah. Yeah, the loan is the same loan that they would get. It's just the upfront.
Yeah, it's just a new way of buying a house. That's
Yeah.
all it is. Literally, that's all it is. And once I got that in my head, I was like, I understood.
Yeah.
Like I thought like Joe was trying to pull a fast one on me for sure. I'm not joking.
No, not Joe, never. And also, like Jamie mentioned, you'll have a welcome call. The buyers will have a welcome call. There's home purchase coordinators within Cash to Keys, the platform, that handle additional things. So all of these extra moving parts that you feel like you might not be so sure on, or like we're saying, there's a couple of extra logistics in the front. We have additional people to support Jennifer, Jamie, the LOs, and the agents and the buyers through this process. So like it doesn't get any better, honestly. It really doesn't. Yeah.
And what is, I mean, I know we're on this topic a lot, but I think it's like, is it like 99.9% of all transactions close with the regular mortgage? So
Yeah.
the cash offer guarantee really is more of an insurance policy.
Right.
It
Right.
never really gets executed, you know what I mean? Unless you really need to, right? But most of the time our loans are done ahead of time, so we're closing on time.
Right.
Correct. There's a question about the appraisal. So on an FHA loan or VA loan, it would be subject to an appraisal. And then once you are beyond that 14-day period, it is a guaranteed close. If you have a conventional loan where when we're running it through automated underwriting and we actually get a waiver on that appraisal, then it looks just like a true cash deal because there's no mortgage contingencies, no appraisal.
But you have to get the PIW for that, right? I mean, so you can't, it's
Right.
not for every transaction you get the
Right.
waiver.
If you
And
get
if
the
the
waiver.
client wants, if the buyer wants to cover the appraisal gap in their offer, they're allowed to do that. Just like normal. I always say the term like business as usual. So everything that you know about a contract and how you put an offer in, none of that changes at all, except that you're not checking off the contingency on the financing.
All right. All right, Jamie, Jennifer, I got a question for you. I don't know if this is on your list or not, Haley, but I'm going to ask this question because this is a hot topic. A survey came out like yesterday or this morning. I can't remember. You know what I mean? At my age, I can't remember stuff too often, but um, 80% of American homeowners think, or Americans think this is not a good time to buy a house. That's a huge number, guys. That 80% is like like if you put 10 people in a room, eight of them saying this is not the good time, this is not the right time to buy a house. I mean, what, Haley, you jump in. I mean, I know you, I mean, like, what do you guys think? Is this a good survey? Is this accurate? Is this like just pumped up facts? What's going on here?
I
Well,
say it's always a good time to buy.
yeah. I mean, the best time to buy is when it's the right time for you. And that's, I'm a firm believer in that. And I think that like something that I think at AnyMac too is like, we're not here to convince you to buy a house. We're not here to make you buy a house. That's not the goal. Home ownership is the goal. So something that's really important that I think that we do here at AnyMac is like, we work with you, not against you. So it's like our goal is to get you into the home ultimately in the best time frame with your needs in mind. So like Jennifer and Jamie were saying with Cash to Keys, like it can happen really fast, but if you're taking a little bit of time and it's going to take you a little bit longer, or you take 6 months to find the right house, like that's okay. Like that's not what it's about here.
Yeah, yeah. Jennifer, how do you in the Delaware area, right? Because obviously you guys are in a very tight inventory market.
We are, yeah.
When you hear that kind of survey, you've got to be shocked, right?
I am. Yep, that's very high number. When someone tells me that, though, like just say a first time home buyer, oh, so and so told me it's not a good time to buy a house. The first thing I really like to talk about is equity, like home equity. It's like my favorite thing about home ownership is the amount of money that you gain by owning a home. And I think a lot of first time home buyers, they don't know that. They don't understand how that works. So I always like to talk about home equity and give examples of like when I was a first-time home buyer and the first house I sold and how much money I made off of that house. Like I just make it personal and put myself in their shoes because I know it's scary.
Mhm.
But yeah, that's usually what I talk about when someone tells me that it's not a good time.
Jimmy, is there a good time to buy a house?
I think it's always a good time to buy a
Yeah.
house because, I mean, you, like Jennifer said, you're going to have the equity, in the future, you might be able to borrow against it, but it's your own home. You're not paying somebody else's mortgage. You're either going to rent or you're going to buy. And right now, I don't know about the other states, but Connecticut, the rents are insane.
Yeah.
So you're paying, 2,500 for an apartment. That's
Wow.
insane. So, the prices, I think we're starting to level off a little bit. The rates are choppy, but when the rates come down, there's just going to be more buyers that are going to come back into the market. And we just have such a low inventory that I can't see the market crashing. It's just going to keep, I think once the rates come down, the prices are still just going to remain or increase.
Yeah. Yeah. I mean, the numbers don't lie, and the numbers absolutely justify what you just said, Jamie, that the inventory is not there. The demand is still out there. You know what I mean? And look, I always believe this is that real estate is very grassroots. So, you guys are in Delaware, Connecticut, Haley's in New Jersey, I'm down here in Northern Virginia, but things could be different in Texas. Things might be different in Utah, that kind of stuff, right? So everything you have to look locally. Is that accurate?
Yeah, I think so. And I also like to try to compare, when people say, oh, well, the market crashed, when they try to compare it to '07, and I lived that, you lived that too. The times were so different back then because, let's be real, there was just a lot of fraud in the mortgage industry. I worked for Countrywide. We had the option arms where those were for people that had money that should have been investing it elsewhere. And they were putting people who really didn't qualify into these programs. Not only that, but we were able to pick up the phone and call an appraiser ourselves and say, hey, could you go to this property tomorrow? Okay, great. And then, there was so much fraud in the appraisal arena too, that now everything is so regulated. And at that time, there was a surplus of homes. Right now, there's no inventory. So I think with everything just being so regulated, we'll never see that again because there's just so many checks and balances in place.
Haley, were you around in '07? Where were you?
In seventh grade. I wish I was buying houses, but instead I was going to cheerleading practice.
See, Jamie, you and we're like the icons of this webinar. We survived '07, '08, man. We got our badge of honor.
Yeah.
For sure. No, for sure.
Quite honestly, I think the last several years have actually been tougher than the '08, '09 years.
I agree.
Because at least in '08, '09, we had inventory to dig out of the hole.
Yeah.
Right.
We have not had inventory the last 36 months or 48 months.
Yeah.
So,
very true.
Yeah.
Haley,
100%.
let's get this show back on track. Ask a good question now.
No, we're doing great. This is exactly what this is about. We're talking, we're figuring stuff out. To jump a little more into down payment assistance programs and seller credits. So I did see something. Keeping Current Matters is a page on Instagram. They said that roughly 44% of deals have some kind of seller concession, whether it's to help with closing costs or it's because of repairs or something like that came up during inspections. Are you guys seeing a lot of seller assist, or is it kind of falling back a little bit like it did in 2021 and 2022?
I've always seen seller credits. I'd say a good half of my deals are put together with seller credits. And it depends on the area. You'll have some areas, like I'm in Connecticut, Fairfield County, New Haven County. There'll be certain areas that will be like, you're never getting an offer accepted with a closing cost credit. And, I have to kind of just be like, okay, because I do a lot with closing cost credits, but it really just, boils down to what's going to be the best offer. If you're in a multiple bid situation and you're the only one asking for a seller credit, then no, you probably aren't going to be the best offer. But I wouldn't say that it's impossible because a good half of my deals do come together with seller credits.
Nice. Jennifer?
Yeah, I agree with Jamie. It just really depends on the area. So certain areas that I work in, it's just don't even ask, you're not going to get it. And then others, I see sometimes like 15,000, 20,000 in seller help. So it, again, just depends on the area.
Yeah, definitely. Speaking of that kind of stuff with NAR and all of the commission structures and things like that changing, are you seeing any of that being added in? Do you think that makes a difference for first-time home buyers and home buyers in general when they're submitting offers, when they're asking the seller to pay the commission, or do you feel like it's still business as usual?
I think it's just still the same. First-time home buyers, they really don't, most of them don't have that money to pay their agent. But I'm just seeing business as usual, like you said. They're asking the seller for it and they're getting it, and we just keep it moving.
I think it just made a big confusion for no reason. Just wanted to upset the market, but I usually see business as usual. I've seen some people only paying 2%, and I have had instances where the agents will, ask for that extra 0.5%. First time yesterday, I just seen one listing that was not offering, so the buyer will be responsible for that. But for the most part, it's business as usual.
Yeah.
But is there a different way that the agents are being compensated? I mean, or is it still listed on on the MLS, like, or it's not
Oh,
listed anymore,
yeah,
right?
no, it's not listed anymore. Now it's like a big secret. So
Yeah.
it's a little
You
more
gotta call and ask.
yeah, you have to call and ask, and it's like, and it's just, it's obnoxious for no reason, really. But a lot of times I'm seeing the same thing. I've only seen a handful of listings that are saying like no commission when you call and ask. But I think kind of like Jamie and Jennifer both said, like it's business as usual. It's not something that first time home buyers need to get scared about, that they're now going to have to pay all of this commission and stuff like that, because it's not happening as often as all of the headlines and things were making everyone think.
Yeah. Yeah. It was a
Right.
lot of conversation about that a year ago, wasn't it?
Yeah, yeah, just about. Yeah, last summer.
Yeah. What about non-QM loan guys? Are you guys doing some non-QM business out there?
Like a non-QM loan.
Home buyers getting into this, or what do you think?
Yeah, I've been doing a lot of the DSCR loans now. The
Mhm.
investor loans are super easy, and yeah, seeing a lot of that right now.
Somebody's asking about a bank statement with no credit, but I do not believe so. We have minimum credit requirements, and most of the investors have trade line requirements as well.
Mhm.
Yeah.
Yeah.
Yep.
You have to have credit when you do a non-QM loan, right?
Yes.
Yeah.
It's weird. When non-QM first came out, everyone thought that they were going to be like the answer to the subprime. Like, oh, my loan didn't get approved through Fannie Mae, you know what I mean? So I'll just take them into non-QM deals. But it's really not that way with non-QM, right? It's a separate, like, almost like you have to learn non-QM for non-QM.
And you have to be qualified. It's like back then, subprime world, and I was all A for a while in the wholesale side. So we had like the stated and the Nina knee, no income, no asset, no employment with like 5% down. Like no wonder our market crashed. You have to put down 20% for the most part on a DSCR loan. So these are people that actually are putting money into the transaction. They're not just gonna walk away that easily from it. And, the credit score requirements are not bad. Some of them will actually go down to like a 620, but the down payment requirements are much larger. There are credit requirements and reserve requirements. So it's not the same type of product like we used to have before with the subprime world at all. You have to be qualified.
Do you think it's smart for first-time home buyers to look at non-QM as an option, or should they kind of like be more prepared for more of a traditional mortgage program?
I think if you're an entrepreneur, I think if you're self-employed, then the bank statement type of loan is a great product for the entrepreneur. I don't necessarily think like a DSCR loan, which is more for, more of a savvier investor, though some will allow a first-time home buyer. I think the bank statement's pretty good for our self-employed up and coming, barbers and beauticians. And, there's a lot of self-employed, space. So I think that.
Haley, it feels like a lot of self-employed borrowers don't feel like they can qualify for a loan, though, right? I mean, so that's kind of interesting what Jamie just brought up.
Yeah, you definitely are seeing very similar space to where people are just scared, Well, I don't want to even try. But like it's okay. It's okay. Let's figure it out together. Like Jamie just said, maybe it's not a DCR loan, maybe it is just a bank statement loan, or sometimes even just changing up different types of down payments that you're putting down can move things around for you and kind of make it happen. Jennifer, with the investor loans that you're usually doing, do you see a lot of first time home buyer, like millennial kind of, or is it people doing second homes, third homes, or
Yeah, it's these types of loans are for people that already have investment. They can only have one. Even if they have one, it's fine. But they're for people that already have investment properties.
right?
They're just getting another one. Yeah.
Nice, awesome.
Yeah.
So maybe can we talk a little bit about timelines? So first time home buyers often feel like well, my lease isn't up until August, so like I'm good to start what in like July. So I hear that a lot from people that I used to go to school with and stuff. Well, my lease is good, or I still live at home, like I've got all this time. Like, let's talk a little bit about timelines and what that can look like if you're getting pre-qualified in June and your lease is up in July. Like, you're gonna be in you're gonna be in trouble, especially in places where there's no inventory.
Yeah. I mean, the pre-qualification or pre-approval process is fast, but finding a house and getting under contract, that's a different story. I mean, 30 days, I think for us is just a standard closing. I don't think that's considered a rush closing. It's just a standard timeline for us. Right, Jen? You agree?
Yeah. Yeah, I would agree with that. I always tell people just get started as early as possible. I mean, 6 months out is not too far out, in my opinion. I mean, start at least, we always do soft credit pulls, just to see what the credit score is. So it's not a hard inquiry. I feel like a lot of first-time home buyers are very concerned about their credit being pulled. And that's like the number one reason why they don't start. So we do soft credit pulls most of the time. So that should be a way that you can encourage your buyers to get started. And then who knows? Who knows what's going to come up? I mean, if the credit score is in the low 600s, we want to get that built up in the next few months so that when it does come time till their lease is up, they can be, again, that word prepared, they're ready. So, yeah, I love when they start really early so that we can really work on all that stuff in the beginning so that when they go out to start shopping, they are ready.
Right. And is it true, first time home buyers too, they think, well, I want to rate shop, or my dad wants me to try my Wells Fargo bank or where I bank at Chase or something like that. Is it true that if they have their soft pull done, or even when they're ready for the hard pull at more than one loan spot, is it all count as one pull, as all count as one hit? Or
If
what?
it's a hard inquiry and then they get another hard pull within, I think it's like 2 or 3 weeks. I don't know that I know the exact answer, but I think it's like maybe 2 weeks. If it gets pulled hard again, it counts as one. Um, yeah, so there is that time frame that they're allowed to get it done more than once. If it's just for a mortgage, if they go to look for a car and they get a credit card, that's going to be different.
That's, I feel like, something important to share with first time home buyers, because I've heard that a lot from first time home buyers for sure. Well, I'm again worried about my credit, and then I want to check and I want to rate shop and stuff like that, which when you work with Annie Mac, you don't have to rate shop.
But is it smart for people to rate shop? I mean, let's put it out there, guys. I mean, is it? I mean, like if I'm shopping for a car, right? Right, I'm gonna go to multiple car dealers, or at least look around at Carvana or whatever online, and I may not haggle like I used to in the old days, right? It's not needed, but I mean, is it still smart to get like multiple bids on a home loan, or should they just trust Jamie and Jennifer say blindly? How does this work?
I think that yes, I think you should be comfortable with what you're doing. And if that means rate shopping and going with the lowest rate you find, if that's your choice, that's great. But like we were talking about in the beginning, if you're going with the lowest rate on the block, you are not going to be able to get a hold of somebody on the nights, the weekends, the holidays. You're not going to, you're going to be a number on a piece of paper. You're going to talk to a different person every single time. So that saying you get what you pay for kind of thing, that's really what will happen when not all rates are the same for every person either. So if you're just calling and picking up the phone and asking, what's your rate? What's your rate? What's your rate?
Mhm.
It's not going to be accurate until that person has all of your documents, all of your information, your credit score, your down payment, the price of the house, all of those factors. That's when you really have a rate. So I
We had
think
a
that, yeah.
borrower. We had a borrower from one of my loan officers. Literally, after the loan was approved, said, "I'm moving my loan to another bank, to a bank, right?" Because they said they could do his loan 90% no MI. And sure enough, 2 weeks go by, he comes back and he's like, "Hey, they denied my loan. They offered me 20% down with no MI, which is what you guys were offering me." Right? So it's like, and then no one ever told the listing agent that he had moved the loan.
Oh no.
Oh,
Yeah, yeah. So now they want us to, they're holding our feet to the fire of close it, but we're like, you withdrew the file, we canceled the file, we have to start a brand new loan all over again.
Oh
And it
no.
was so hard to explain that to people, but it was like we were put in a bad position.
Right.
But the truth was, we had nothing to do with the decision of that particular borrower. I mean, Jamie, when you have clients like that, I mean, is it infuriating? Is it like you want to throw up your hands and say, dude, you're not going to get a 90% with no MI with what you got, what I've seen.
Well, I think, sometimes people sell single premium MI as no MI, right? So you don't see it in your monthly payment, but it's there, it's financed into your loan amount, and we could do that, all day. You're putting down 10%, you want to do a single premium MI, you're not going to see it in your payment, but you will see it on your loan estimate as a fee. And if we're rolling it into the loan amount, the loan amount will be adjusted accordingly. So I think it's, again, just goes back to the education of, people don't take the time to explain, to go through the loan estimate, to go through a cash worksheet, just to explain what's going on. They're just saying, oh, there's no MI, and not really speaking it through. So I think It's just more on the education and the communication, but also like if you're going to rate shop, that's fine. Do it in the beginning, because especially if I'm picking up the phone and calling that listing agent and they know me and you're getting your offer accepted in part because I gave that letter and then I called the listing agent and they're like happy that I'm doing it and you're switching, you better tell the listing agent then that you're switching lenders because,
If not,
a
I'm
big
going.
part, yeah,
Yeah.
I mean, a big part of that is because we were doing the mortgage. So
Yeah.
yeah.
Yeah. And transparency. So like you're saying, going over the loan estimate and finding that the MI, it's in there, like they put it in there. It's just in a different line item. And they're not being honest with you and they're not being transparent with you, but they're getting you fired up and getting you excited because you think you're getting a better deal.
Yeah. Something my coach used to tell me years ago in the mortgage business when I was active loan officer was clients don't always read, especially first time home buyers, all the details.
Yeah.
And I always assumed that they were reading everything. So if someone said, "Hey, your rate isn't as good as mine," I just figured, okay. And then when I started actually executing what my coach was teaching me, I found that people were making mistakes all the time,
Yeah.
reading stuff that just wasn't there, or it was being hidden somewhere else. You know what I mean? Or that rate was lower because they were being charged 2.5 points and my rate was 0 points.
Mhm.
Something as obvious as that, the borrower could easily miss.
And just not know to look for, especially as a first time home buyer. Like you don't know any better, you know?
Yeah,
So
yeah.
I think that's definitely a part of it. I do want to dive into our mobile app. So the
Oh,
mobile
yeah.
app is something that's super helpful for first time home buyers talking about education and transparency. You see everything on there, right? Jennifer, can you talk a little bit about
Yeah, I
how?
love the mobile app. Yes, we have a mobile app, and for agents, we co-brand with them. So it gives you, as the agent, the ability to share that link with your clients or with your leads, and it has your logo and your name and your picture. We're on there as well, but it just really gives the clients the ability to just go into their loan. It's like a self portal, they can see everything that's going on at all times. They can upload documents to there. They can sign documents in there. Um, I'm just trying to think. There's calculators in there, affordability calculators, things like that, to really give them a lot of the tools that they need during the whole process.
Yeah, yeah.
Yeah.
And my favorite part of about our mobile app, I just got to chime in on it. I love this, right? Because I swear to God, every year I think I'm going to go back and become a loan officer full time again, right? And then I fail miserably because you guys are way better than I am. But on our mobile app, if you pre-approve a buyer or pre-qualify a buyer at say $4,000, the realtor can issue their own letters if it's like 360, 375, 350, as long as it doesn't cross that maximum sale price. And I love that because in the old days we get the call at Saturday afternoon or Saturday evening, right?
uh,
And now realtors can just do it on the mobile app themselves. I mean, that's just, I mean, it's such a time-saving element there.
yeah.
You get there, you do the house hunting, you need the pre-qual letter. Jennifer's already pre-approved your borrower. You print it out and you rock and roll. You never do like no communication. It's the best life.
And then you,
I still do my pre-approval letters for my agents, but yes, you can go in there if you really needed to on your own, but I do like to do my own.
Like I said, you guys are way better than I am.
Yeah.
That's why I'm still miserably. By January 10th, I wrapped up all my business plan for being a
Yeah.
loan officer again.
But it's helpful because we can do the pre-approval letters right from our phone too. Like as the loan officer, if we're out and about, we're, in a meeting, something like that, we're not at the front of the computer, we can just generate it right from our phone and email it. So I love that. All the notifications that come through to everyone on the file. So you're getting those notifications, those milestones, like appraisal was ordered, clear to close, all the main ones. You're just getting those notifications immediately, which is nice because I might not be able to call you, the agent, until like an hour from now to tell them that we're clear to close, but they already got an email or a notification on the app saying that we were. So it's nice. I love it.
especially for a first time home buyer that wants to be in it, like we talked about communications.
Yeah.
Some people need that phone call, but if they're cool with getting a notification that says Annie Mac says you're clear to close and we're clear.
Yeah. Well, I find that like email, especially for the younger first-time home buyers that are, maybe in their 20s, and email is just really obsolete for them. They don't email. They're on their phones. Some of them don't even have a computer, they just have their phones. So it's really nice that all of the things are in that app as far as signing things like, hey, there's a document in there that we really need you to sign. We're closing in 2 weeks. You have to sign this. So it's all just there. It's really, really easy to use. So that's really helpful.
Jamie, what do you think about a mobile app? You've been pretty silent on this.
I love our mobile app. I mean, because, again, I'm old school where I used to have to like run home to the computer and type up the letter, and you get so stressed out because it's like the weekend and you're out. It takes literally 2 seconds to send the letter through our mobile app. I do it also, like Jennifer for the agents. I don't want to, make them do more work. Or sometimes, I always want to look at everything. So a different property, different taxes, it might be a condo instead of a single family, and there's HOAs. So I always like to check on the property, but our mobile app is great.
Yeah. Good stuff.
Yeah. Side note, speaking of HOAs, single family homes versus condos, first time home buyers, do you think that they are better off finding the right single family home, or do you think that they should go move into a condo or a townhouse where a little bit of extra stuff is taken care of, like the lawn and things like that? Or do you think it's really just preference?
It's preference. Yeah, it's definitely preference. And a lot of first-time homebuyers don't know about that HOA fee or that condo fee. They see that they're approved for, 250,000. And so they're looking in that range and they see this really awesome condo and they want to buy it, but they don't realize that it comes along with, a $400 a month fee that has to go against their debt. So that's just a learning process in the beginning, especially for first-time homebuyers.
Right.
I'm all about the house hacking with first time home buyers. I always like to, and it's not for everybody to live in a multifamily, but if you're young and you can get, into a 3-family, 4-family house with 3.5% down FHA, I mean, you live in it, you're gonna spend next to nothing on that mortgage payment. You should be able to save, and then next year buy another 3-family that you could go live in with 5% down conventional and keep it going. I mean, that's not for everybody, but I just feel like in this world that we live in, having multiple streams of income, including real estate, is super important. So I try to, just give that outlook to, first-time buyers, just to see if it's something that they're interested in. I mean, it's not for everybody. Some people don't want to be a landlord, but I think it's a great income stream if you're down for it.
Awesome.
Do you guys feel like there's more inventory outside of for first-time home buyers outside of the major MSAs? Like, I don't know where you guys are respectfully to any kind of major city, but let's say Philadelphia, for example, right? So if you travel, say, 20 miles west of Philadelphia, is there better opportunities out there?
Yeah, I think so. Here it would be, like the major cities, there's no inventory. But if you go outside to more of like the country settings, and the prices are less as well.
Yeah, that was a discussion we were having on something else where it feels like the first-time home buyers have to kind of realize they're not going to be able to live where their mom and dad lived.
Yeah. Or get their forever home. I think that's something too that first time home buyers get a little.
Right there also
Yeah,
here.
like I want a 4-bedroom, 2.5 bath, full basement. Give me a garage, 350. Where are you? In outer space? On Mars?
Get inside my time machine. Let's go back to 1998.
Yeah, let's go back to 2007.
Yeah. Yeah. So I mean, the forever home concept is really something that I think first-time home buyers may have to kind of mind shift out of. Is that accurate?
Definitely. There's a lot of, shows on TV and the HGTV and all of these things on the internet that they want, the granite countertops or maybe it's quartz now, whatever it is, the hardwood floors, that look. You're not going to just walk into a house and find that for your budget when you're a first-time home buyer, usually most of the time. So just getting into the house and then making it your own is what I try to tell them.
How do you guys walk someone into that concept? Is it the realtor's job to do that, or is it the loan officer's job to do that, guys?
I think it's both. I think that when you're working with a really good loan officer as a realtor, it's a team. We're backing you up as the agent when we're talking to them, and we're trying to get them to just be comfortable and put an offer in. I think it's both.
Hmm.
It's an important conversation too for the bond loans, because I don't know about some of the other states, but Connecticut, for instance, they're given 25,000 in the time to own program, but it's 10-year. It's a 10-year forgivable second mortgage. So if you sell or want to refinance in year 5, you still owe back half of that money. So my question is always, what is your intentions for the future? Because, you can't house hack, because they want you to be in that house for the life of the loan. So if you want to live there for a year or two and then move on and rent it out, the
No.
assistance is not for you. So that's something that I do definitely have all the time up front, especially with the assistance programs. Are you going to want to be here for a while?
Yeah. Yeah. Smart. Very smart.
That plays a huge factor, especially when it comes down to DPAs, because some of them are forgivable and some of them are not. So that's definitely super important. So to wrap up, can we talk a little bit about some of the best advice that you have for these agents to share with their first-time homebuyers?
Make sure you're connecting them with a very, very good loan officer that is explaining everything to them, walking through all the costs, walking them through monthly payment, really making them feel confident before they go start looking at a house. I think that's probably my best advice.
Yeah. And I mean, the cash to keys to the real estate agents is huge.
Yeah.
Because on average, you're putting 1.5 offers in versus, what is it,
I
6 or
think it's
7?
8. I think it's 8.
8.6. Yeah. 8.6.
8.6.
So agents, imagine writing 8.6 offers. We'll round it up to 9, or you can write 1 or 2,
Yeah.
Right.
So
Yeah.
cash keys definitely makes a difference for sure. For
Big
sure.
difference. Big difference.
Mhm.
All right. Well, Fabi, do you have any final words that you want to share? Any words of wisdom as well?
Well, I was thinking when you asked that question about what, and I remember years ago I told this one guy, like, if you have to come home and think about buying a $20 pizza for your kid that night, don't buy this house. Like,
Yeah.
the mortgage payment, you got to be able to be comfortably make that payment and feel good about it.
Yeah. Live your life for
Yeah,
sure.
like think about the day-to-day activity that you're not thinking about, because those life is going to happen. And if you have to make that mortgage payment, then and it's not comfortable, then it's not worth buying the house.
I want to be house poor.
Yeah.
Exactly. Yeah. We definitely don't want that. We definitely don't want that. All right. Well, if you guys don't have anything to add, I think we can kind of wrap up. We hit most of the questions in the chat. If anything outstanding, please feel free to send us over an email and we'll get you to answer as soon as possible. All
All
right.
right, guys. Thank you.
Thank you.
Bye.
Bye.